here. He's going to be going over our fix and flip products and just kind of giving you a 10,000 view of what we can do for your clients. Please feel free to ask any and all questions you have. Dan, do you prefer doing all the questions at the end, or are you okay with being interrupted? Like, how do you want to do that?
Yeah, if anyone has any questions about the product, they can feel free to jump in, fire them off, just so we can kind of keep everything moving along as good as we can. Absolutely.
All right, sounds
Not a
good.
problem.
So
All right.
raise your hand,
Once.
and we can go ahead and unmute you, and you can ask your question live, or you can always put it in the chat feature that's on the bottom of your screen, and one of us will be sure to help you get that answer. I think that's it. Try to stay till the end. We have some great marketing features that you can get with the loan officer that invited you here to go into our marketing department and get those made up for you. They're great co-marketing pieces. And I think, let's see here. I will go ahead and, just so everybody knows, Mia, she is our guru as far as these classes go. She keeps us on task. And in this room, we have Tiffany Maxwell from our loan officer support, as well as Jordan. Yep, Jordan is here as well. Jordan Sires from Loan Officer Support. And I will go ahead and introduce Dan Denniston. He is going to be our expert for the day. And he is also with Loan Officer Support, which you'll hear me do my plugs about loanofficersupport.com once, maybe twice, 3, 6 times throughout this session. So with that being said, Dan, thank you for being here. And why don't you take it from there?
Excellent. Thank you so much for the introduction, Karen. Appreciate you. Guys, we're going to be talking about the Fix and Flip program. I'm just readying my slide. Want to let you know that we're going to make all these materials available in our back office drive. So if you've been invited here by a Nexa loan officer, that's awesome. We're going to make sure that that information gets emailed out to you in a zip drive so you get access to the presentation in case you want to also share this with your investors, as well as a lot of good scripts and materials, some guides so you can get a little bit more familiarized with the loan product as well. So I am just working on getting my screen pulled up here, and just give me 1 second, and I'm going to go ahead and share my screen. And then let me know if I've got the right screen up here. It should be our Nexa Mortgage front page. Does that look good?
Yes.
Yep, it looks great.
Excellent. Okay. So I'd say one of the #1 things that to know about the fix and flip product is this is not for a typical conventional loan. This is a house that is going to have a lot of opportunity costs. Naturally, with the name, you can say that this house needs to be upgraded, renovated. It needs a lot of work. The benefit here with this product is with a good investor that sees an opportunity to get a house on, say, wholesale, or that needs work, is that they can close on this loan very, very quick. Within 48 hours, no appraisal. And then what they're going to end up doing is financing some of that renovation cost and then allowing them to complete the project and then get into a new long-term fixed loan. So it's designed for investors to purchase these properties with upgrading them and renovating them, and a loan program that's going to help them be able to do so quickly with a little bit more investor money to make sure that these get done quickly. Now, thing here to note is some loan amounts. We can go as low as $75,000 and up to $2 million. So we're seeing a lot of projects out in maybe the South, Missouri, Kentucky, Tennessee, that maybe these older properties need a little bit more, or that are coming at a lesser cost, lesser purchase price, down as low as maybe $70,000 or $100,000 that you can finance an additional $10,000, $20,000, $40,000 into for the cost. And then of course, in other parts like California, you're going to need a lot more money, like $2 million, up to $2 million for that flip. So interest rates will range from anywhere from like 9 to 12, as you'll see here on this PowerPoint, with the points ranging from like 2 to 3 typically for these loans. And the fix and flip product is typically, like I said, a very short-term loan to finance the flip and then a conversion into a long-term hold if that is the intent of the investor, to make it maybe a long-term or a short-term rental, or just make it move it off the market as a home sale. So over the course of the period of the flip, you're just going to be making interest-only payments. Interest only, not to the principal. So it's minimal, and that helps the cash flow, so you don't have to worry about a lot of extra additional money going out to finance the loan. You're focusing on basically just getting that that flip ready to go for the resale market, or finished and then converted to a new loan. Any
That's-
questions on any of the bullet points so far here?
No, I love the interest only though for that short period of time.
You bet. You got it. Now, the minimum score here, you definitely want to be at about a 660 credit score. That's with no restrictions. Once you get below a minimum or middle FICO score, between 620 and 660, you'll need a few compensating factors. The best one of that one would be a few previous rehabs or transactions that you've done in the past to show that you're an experienced investor. That's what they're going to be looking for to make sure that, you know, this isn't your first rodeo, so to speak. A little bit higher risk, a little bit maybe higher cost you'll see because of the risk to the actual wholesale lender. So best to have a little bit higher on the credit score, but still doable on the lower end of the 620s.
Hey, Dan.
Yes, sir.
Yes, what would be the documentation for proving that you're not a first-time investor?
Typically HUD settlement statements. Settlement statements from any previous transaction you get from title as an investor. You'll be able to see those and provide those, and that's what the investor is looking for. Is you've done these before? Cool. Do you have some settlement statements from title in the last 6 to 12, maybe 24 months, depending on the scenario? But that's the first thing that you're going to be looking for.
Awesome, thanks.
Yep, you bet.
And now you
So-
said that there's no appraisal, Dan?
Correct. No appraisal. So let me go back to that. So when you find an opportunity, house that meets the guidelines that you're looking for, what you can do is, if you have a purchase agreement, the investor is going to do like a regular credit application and review, but they're not going to require an appraisal. They'll do an electronic valuation based on some other
Okay.
comps in the area. But they, if there's a, you know, an opportunity here where they're seeing comps coming in a lot higher, like, you know, and you're getting this property for, you know, much lower than retail, they'll be able to see that. So you can actually,
Okay.
you know, provide the address, use the comps, the investor will be able to see those, and then know that, you know, okay, there is a big delta here that you can use by upgrading, renovating, and so on and so forth. And there's a follow-up to that, like over the course of your flip, you're going to be getting the draws to get reimbursed for your money you put out in your construction, your sheetrock, your appliances, your cabinetry, your demo. They're going to do up to 85% of your costs. So if you put in 10,000, they're going to give you $8,500 of that as a reimbursement draw. Okay. Now,
Okay.
the other great part of this, I'm trying to keep this, you know, pretty simple, but the
Yeah.
best part of this draw is that you're going to be using an app on your phone called TruePick. TruePick is just going to be some pictures that you're going to upload through the portal that they'll be able to utilize and verify you've completed the work. So no inspector needs to come out and visually see that the work done, so you don't have to wait on those turn times. It can be just done with your phone.
Wonderful. And now when they close on those, do the realtors have to wait till the construction's done, or do they get paid their commission at close?
So the realtor, if they're helping the investor, they're probably, depending on the contract that they worked up, paid out once it's actually exchanged hands. So title would distribute that, you know, and it could be, you know, and those are many different ways that they're doing that, like via a wholesale assignment fee, so on and so forth. That as a non-experienced realtor, I couldn't say, but there's many different ways real estate agents might end up, you know, helping investors find those deals, and then probably just get paid out through title based on whatever contract they have.
Gotcha.
Okay. Any questions on any part of that or TruePick or anything so far? Wonderful. So the down payment is typically going to be 15%. You might be able to see a 10%, but I'm not going to talk about that because generally it's going to be a 15% down payment that you can utilize. Now, there might vary a little bit with some of these guidelines from lender to lender. So you want to work with your Nexa loan officer and get a little bit more property specific about the one that you're actually looking at, because that's going to make a big difference, as well as the investor profile and the property profile and so on and so forth. But as you'll see here, it's typically going to be that 15% because they go, it's like an 85-85 loan to value, which is 15% generally of the down payment. And then they'll do 85% of the draw. So that's when they talk about that 85-85.
Okay. And
you'll see the other number at 70%. That's always going to be your 70% loan to value, meaning 70% of the actual after repair cost. So for easy math, they will finance 70,000 of $100,000 like after repair value. And then you can use that 70 loan to value ratio as far as what it's going to end up comping out at after you've done the renovations and repairs. But work with your Nexa loan officer a little bit more in depth, because that's one of those things that we can sometimes look around, find out what we can, get more options for you on that.
Wonderful.
So one of the other great things about this, there is no income verification that we're doing on this, because investors, we're not worried about the income. This is basically, an opportunity as an investment with your credit, and sometimes also, of course, the background, the experience level play into the big part. But we're not looking at W-2s. We're not asking for tax returns or anything like that. We're focusing on the opportunity value with the property, what it will end up appraising for after the renovations. So it makes the underwriting a lot easier here. Now, for the assets, it's important to have some assets here set aside, because naturally you're going to have your down payment, you're going to have your loan costs, your loan fees, of course, that you'll have to pay for, and the renovation. But the wholesale lender is really looking forward to seeing that you have at least the 6 months of interest reserves to carry you through the end of the loan term. Typically, these are a temporary loan term. These fix and flips, it's a 6-month term to knock out the project, and then you'll convert it to a long-term loan, right? So they want to make sure that they're going to look at us seeing an asset statement, a checking portfolio, some account that's liquid that you can use to pay down each month's interest. We're not paying principal, just the interest for the 6-month term. And then, of course, you have, the insurance title and things like that. But that's what you want to make sure that you have. Most investors will have no problem. They have their, money set aside because they have their capital accounts that they're using for fix and flips, of course. So that should be no problem. Important thing to make sure is it's like, hopefully a very, easy to use, easy to access statement, asset account that's liquid.
And Dan, what are some examples of accounts where those reserves can be used? Or
I've had a
what
lot
have
of
you seen in the
investors
past?
use, typically the investors I work with will use just like their business bank account. An operating account where they work out of is typically the easiest. They've got that on hand. It's on their mobile. They can easily go to their statements, email to upload, make it really quick. 2 months, send it right over. But if they don't have that, you might be able to also use other liquid accounts. Retirement accounts typically need to be liquidated. So work with your loan officer on getting acceptable forms, because that's also might be one of those overlay guidelines that a lender might want to see a specific statement. But definitely work with maybe just a typical business operating a bank account.
Okay, so for our realtor partners, that may be a good question to have, or a good conversation, I guess, to have, is do they have this, and is it liquid? Can they provide statements?
Correct. Anytime I'm working with an investor, it's one of those initial consult questions I'm asking for is, where are we going to be sourcing some of these reserves? Where would you have these funds available? And then they're typically say, oh, I got it in my business bank account. Or, sometimes, everyone's a little bit different and they might have money in different places, but it's important that we're going to need to see this sourced, and obviously get a lot more tricky when it's in multiple different places. I would say trying to have everything consolidated into one, because if we start, trying to source money other places. We're just making it a little bit more tricky for underwriting to get through that. So we want to kind of consolidate. We want to definitely sell the steak on here, which is basically making things easy. When I talk to investors, I try and explain to them, put yourself in the underwriter's shoes. They have to make sure this underwrites to their guidelines. So
Yeah.
make it pretty, make it easy. Oftentimes there are things that we need to do as loan officers, you know, because we'll get sometimes screenshots, which screenshots can be very difficult to make it look good, right? Let's
Yeah.
try and make sure we make it look good, easy to underwrite. Easy to underwrite is a nice, clean PDF statement straight from the account. Let's try and not be, you know, patchwork or hodgepodge of documents and screenshots. That's what makes our life a little difficult. So I don't want to get down to a rabbit hole, but that is one of the things I could definitely infer to my investors is let's try and get good, clean statements here. That's what's going to make this a whole lot easier for underwriting to go through and make things go faster turn time wise. So that's something that we can everyone work together as a team on, is making sure it looks clean. I don't want to go off that too much because that is one of the clusters or bottlenecks we as loan officers run into. But anyways, I'll get off my soapbox here.
No, I appreciate that. Julio, did you have a question quick?
Yeah, I just want to ask about the loan fees applied to these loans.
Loan
Which
fees. So
one?
you typically have the loan points, right? So there's an underwriting fee, and then there's typically, you know, the loan points associated with that loan, which, you know, if you compare it to when you go get car insurance, you get a little bit of risk adjuster. If you have a brand, a vet or a performance vehicle, you get a risk adjuster if you have many hits on your insurance, right? Or a 16-year-old on your vehicle. You have risk-based adjusters for a higher insurance premium. Same thing, risk adjusters here. So a very common one in real estate is condos, multi-units, those properties that maybe are not as easily to be moved on the market like a single family home, right? A single family home is very easy to move. Say if that comes on your books, you could sell that like that. Duplexes, multi-units, condos, it's a smaller segment of buyers out there, which means it could remain on the books longer, which means that there is risk adjusters for points on there. So that's now that's what we do as loan officers, is shop that loan for you, go to many of our investors, because there's not just one investor here that will do a fix and flip. There's many. And we find the right lender that will work with and maybe offer the best terms for that investor. Maybe it's the guidelines, maybe it's the pricing, maybe it's the turn times. There's many factors here that we as loan officers consider when packaging a loan and sending it to a lender. Those three things are what I consider to be the top most important, are turn times, pricing, and guidelines, and how to fit those. And if there's a knockout, like this investor doesn't have the experience, or this property doesn't work with this lender, then I move down the list and on to my next wholesale lender. But loan fees, basically all property related, risk related, associated with either property and or the investor. And then of course, you know, the standard third party fees, tax, title, appraisal, etc.
Okay, thank you.
Yeah, you bet. So I want to highlight that the best part about this program is that it makes it easy should you have a great opportunity and a good investor that's experienced with renovation, a good network of contractors, because a lot of people think that there's a lot of bottlenecks to this. It's not. You don't have to worry about that appraisal. You don't have to worry about inspections. You can use automated valuation, use an app on your phone for the draws. You can close this in 2 days. And then, of course, complete the project renovations and then fix to a long-term fixed rate loan if that's the intent of the investor, or moving it to the market. So any questions on the overall chronology of how the fix and flip loan program works?
2 days?
Okay. Cool. So I'm sorry, I tried to make a good slide for the true pick. That's not a good one. But anyway, that is the summation of the presentation. I do want to let you know we are going to have some scripts available. I could share them with you, but it's a lot of just, you know, scripting that we'll have on a Word document that you can use to call out to your investors, either in a DM or a phone call or an email or any one of those things. As you are funneling and more investors into your CRM, your database, you're going to be staying in touch with them over the course of either a week, month, or the year to help them find the right loan program for them. So we've got those scripts. We're going to make them available to you. So reach out to the loan officer that invited you here to the presentation. They'll zip that over to you in an email so you have those resources available.
And, you know, I just want to put it out there. And if you've been to previous sessions, you always hear me say, get your buyer, log into loanofficersupport.com and talk to one of our experts. It's a great way to not only build trust with your customer, but get your answers right away. So it's basically you're logging in, you're going to be talking to someone just like we are now. You can run your scenarios, make sure you have everything in place so that when this is a go, that it's a streamlined process and you're in and out. And, you know, if you can make it effortless, chances are you have a customer for life.
Thank you so much, Karen. I appreciate it.
Thanks, Dan. I really appreciate it. Anybody else have any questions while we have Dan here?
Awesome. Well, make sure to tune in next week. We're going to do another presentation, one of our loan programs. We'll make sure to get those invites out. So follow your inbox, call your loan officer if you have any questions, and we look forward to helping you out with any of those scenarios that you may have.
Hey, Mia, what's our
Thanks.
topic for next week?
1099, I believe.
That was last week.
Oh, was it?
So we will be having DSCR loans for next week.
Sorry.
DSCR.
Another
Awkward.
investor focus product. You know, keep in mind, you know, for the realtors out there that we're doing a different product, a different tool for your toolbox, not just so you understand what the tools are, but we want to help you identify how to use the tools with your clients.
Tracy, I see your question. We are going to have the loan officer send those over to you. Were you invited by your next loan officer? If nobody here can think of or knows the name of their next loan officer, you can put your email in the chat, and then we'll make sure a loan officer sends those marketing materials and creatives out your way.
I think everybody got
Otherwise-
registered, didn't they, Mia? Everybody had to register with an email?
Yes.
So we'll send it out to everybody that got registered.
Perfect.
Yep.
Awesome. Well, thanks again so much. I'm going to go ahead and sign off. Look forward to next week on Realtors Unplugged. Have a great day.
Thanks, Dan.
You bet.
All right. Following this, we have our real